India and China, long-time rivals, locked-in border disputes and power competition, are now being nudged into a cautious thaw.
Foxconn has asked hundreds of Chinese engineers and technicians to return home from its iPhone factories in India.
China firmly stands with India after the US imposed 50% tariffs on the country.
The world's two superpowers are locked in an economic war. But the real winner? It might just be a third country. As the US and China fight for dominance, global companies are making a massive bet on a new manufacturing powerhouse, India. For years, China was the undisputed world's factory, but the tide is turning. The phone in your pocket tells the story. For decades, that story was written almost exclusively in China. Now, a new chapter is being written, and a fast-growing number of those devices are assembled in India. This isn't just about Apple either. It's a seismic shift that could redefine who makes what for the entire world. Section 1, The Great Decoupling. Why the world is moving away from China. For the better part of 3 decades, the playbook for global business was simple: innovate in the West and build in China. This model created empires, brought down prices for consumers, and powered an economic miracle unlike any other. China became the workshop of the world, a manufacturing behemoth with scale and efficiency nobody could touch. But that era is now facing its biggest test yet. The ground started to shift with the US-China trade war. What began as a squabble over trade imbalances blew up into a full-blown economic conflict. Suddenly, the complex supply chains that companies had spent decades building were tangled in a mess of tariffs and counter-tariffs. De-risking became the new buzzword in every boardroom, and every CEO was being asked what their plan B for China was. Then, the pandemic hit. It was a brutal wake-up call that laid bare just how vulnerable the world was by relying so heavily on one country. When Chinese factories shut down, the global supply chain didn't just bend, it broke. From electronics to medicine, the shockwaves were felt everywhere. The message was loud and clear. Putting all your manufacturing eggs in one basket, no matter how efficient, was a massive gamble. This perfect storm of trade wars and pandemic shutdowns forced a global reckoning. Companies realized they had to diversify. This wasn't about abandoning China completely. Its ecosystem is too vast and integrated to just pack up and leave. Instead, a new strategy emerged: China Plus One. The idea was to find a second, reliable, large-scale manufacturing base to balance the risk. And as companies began their search for this plus one giant democratic nation with over 1 billion people started to look very, very attractive. Section 2, India's moment, the perfect pitch. As global firms desperately searched for an alternative, India started looking like a top contender. This isn't just a case of being in the right place at the right time. India is making a compelling pitch that's becoming harder for global boardrooms to ignore. First, and most importantly, are the demographics. While China's population is aging and its labor costs are rising, India has one of the youngest populations in the world. It has a massive labor pool, and manufacturing wages are still significantly lower than in China, which is a huge cost advantage. With millions of young people entering the job market every year, India has the human capital to power factory floors for decades. Second, India isn't just a place to build things for export, it's one of the world's fastest growing consumer markets. Its economy is projected to grow at a healthy clip, with forecasts putting GDP growth above 6% for the foreseeable future. A rapidly expanding middle class means a huge internal market for the very same goods companies want to produce there. This dual threat of being a factory for the world and a market in itself is a powerful combo few other nations can match. Third, the Indian government is rolling out the red carpet. It has launched aggressive initiatives like Make in India and the Production Linked Incentive, or PLI scheme. The PLI scheme has been a game changer. Launched in 2020, it's not some vague promise. It's a direct cashback incentive for companies based on the sales of goods they manufacture in India. With an outlay of billions across 14 key sectors, the government has sent a clear message. The goal is to boost the manufacturing sector's contribution to GDP from around 13 to 14% to 25%, a move that analysts believe could help India grab a bigger piece of shifting global trade. These three pillars, people, a market, and government action, have created a powerful narrative. India is no longer just a potential backup plan. It's actively positioning itself as the go-to alternative to China. Section 3, the proof in the production, a manufacturing revolution in the making. Talk is cheap, but the numbers and the names moving into India tell a story of real change. Make in India is becoming a reality on factory floors across the country, and the electronics sector is the star of the show. The clearest example is Apple. For years, the idea of an iPhone made anywhere but China seemed impossible. Today, it's happening. In just a few years, driven by a desire to de-risk its supply chain, Apple has made a major pivot toward India. Projections suggest India's share of global iPhone production could rise from around 15% in 2024 to over 20% in 2025. Apple's main supplier, Foxconn, is pouring billions into new Indian plants, creating tens of thousands of jobs. And it's not just Apple. Its biggest rival, Samsung, is also doubling down. In fact, in terms of sheer volume, Samsung assembled more smartphones in India in 2024 than Apple did. The South Korean giant operates one of its largest mobile phone factories in the world in India and is even expanding into laptop production in the country. This shift is creating a massive ripple effect. Propelled by giants like Apple and Samsung, India's mobile phone exports have skyrocketed, reaching over $20 billion in 2024. The country is now a net exporter of mobile phones, a stunning turnaround from just a few years ago. In a landmark shift, India even surpassed China as the leading source of smartphones shipped to the US in the second quarter of 2025. This revolution extends beyond phones. The PLI schemes have sparked growth in other areas too. In pharmaceuticals, the incentives have helped turn India into a net exporter of certain key ingredients. The auto sector has drawn huge investment commitments, with a focus on making India a global hub for electric vehicles. India's total goods exports to the United States, its top destination, have been rising steadily, reaching nearly $80 billion in 2024. This isn't just about shifting assembly lines anymore, it's about building an entire ecosystem. Section 4, the reality check, overcoming the hurdles. While the opportunity for India is massive, the road to becoming a manufacturing superpower is filled with obstacles. The Made in India dream is compelling, but it's not a done deal. There are serious hurdles India needs to clear to truly capitalize on this moment. First, there's the infamous bureaucracy. For decades, India has been known for its complex regulations, often called the license Raj. While things have improved, many foreign companies still navigate a maze of slow approvals and unpredictable policy changes. These bureaucratic headaches can drive up costs, delay projects, and blunt India's competitive edge. Next is the infrastructure gap. The government is on a building spree, paving highways and upgrading ports, but major challenges remain. Congested roads, unreliable power in some areas, and clunky logistics can cause production delays and raise costs. If you want to be the world's factory, world-class infrastructure isn't a bonus. It's a basic requirement. Then there's the skills gap. India has a huge workforce, but many lack the high-level technical skills needed for complex manufacturing. Only a small fraction of the labor pool is formally skilled. This is especially true in high-precision fields where China still holds a big advantage. In a telling example, Apple's suppliers have reportedly had to recall experienced Chinese engineers to troubleshoot issues at their Indian plants, highlighting the challenge of transferring technical know-how. Finally, India isn't the only one in this race. It faces fierce competition, especially from Vietnam. Vietnam has been incredibly successful at attracting foreign investment, thanks to its proximity to China, lower costs, and a government that's laser-focused on being business-friendly. While India has scale on its side, Vietnam is often seen as more nimble and easier to navigate for foreign investors. Overcoming these challenges, cutting red tape, closing the infrastructure and skills gaps, and outcompeting its rivals will be the true test. The opportunity is there for the taking, but it's going to require sustained effort and deep structural reforms. This global economic realignment is one of the biggest stories of our time. What do you think? Can India fix its weaknesses and truly become the world's next factory? Let me know your thoughts in the comments below. And if you found this analysis interesting, please hit that like button, share this video, and subscribe for more deep dives into the forces shaping our world. The economic tug-of-war between the US and China has cracked open a historic window of opportunity for India. For the first time in a generation, global supply chains are genuinely being redrawn, and India is in a prime position to benefit. With its young population, a booming domestic market, and a government pushing a pro-manufacturing agenda, the potential is undeniable. We're seeing the early signs of this shift, with giants like Apple and Samsung placing massive bets on the country. However, the journey is far from over. The road ahead is paved with challenges, from bureaucratic hurdles and infrastructure deficits to stiff regional competition. India's success is not guaranteed. It hinges on its ability to execute, to reform, and to build an ecosystem that isn't just cheaper, but also more efficient and reliable than the alternatives. The real win won't just be stamping "Made in India" on more global products. The ultimate victory will be when the world looks to India not just for its assembly lines, but for its innovation. When the story shifts from "Made in India" to "Invented in India." The world is watching. The opportunity is here. The rest is up to India.